If oil keeps rising because of the Iran-Israel war, your fuel prices could surge again. Inflation could rise and global markets could feel the pressure. But governments have a powerful weapon to stop the oil prices from exploding. A hidden reserve of billions of barrels of oil. And when this reserve is released, oil prices can fall very, very quickly. So the real question is, will governments now use this emergency oil weapon? Because if they do, the entire oil market could change overnight. And the story starts with something most people don't know exists. A massive emergency oil stockpile is created for global crisis. So, many major economies maintain what are called as a strategic petroleum reserves. These are massive underground storage facilities holding emergency oil supplies. The United States alone holds hundreds of millions of barrels in its reserve. These reserves were crafted after the 1970s oil crisis, when supply disruptions caused the energy shortages worldwide. The idea was simple: if oil supply is suddenly disrupted, governments can release emergency reserves to stabilize the market. But here is where the things get interesting, because these reserves are not used often, and when they are used, markets react instantly. When governments release oil from these reserves, two things happen. First, global oil supply temporarily increases. Second, traders realize that governments are trying to stabilize the prices. Now, this combination can quickly push the oil prices lower. For example, during the past energy shock, coordinated releases from the global reserves helped calm the oil markets. This is why investors always watch for announcements about the reserve releases, because even the possibility of release can move the oil price. But the Iran Israel war introduces a new risk, because the real question isn't just whether the reserves will be used, it's whether they will be enough or not. If the oil prices continue rising towards $120 per barrel, governments may face strong pressure to act. Higher oil prices can trigger higher inflation, higher transport costs, political pressure from voters. Releasing the emergency reserves becomes one way to calm the markets without immediately increasing the production. That is why analysts are closely watching whether governments coordinate a release or not. But strategic reserves are only a temporary solution. They increase supply for a limited time. They do not solve the long term supply shortage. If the conflict continues and supply disruptions become real, oil prices could still rise again, which means reserve releases are more like a shock absorber than a permanent solution. Oil prices influence far more than energy markets. They affect the inflation, interest rate, corporate profits, global stock market. So when the oil rises sharply, markets often become volatile. And when governments intervene, markets react just as quickly. That is why investors watch both oil supply and government actions very closely. Because sometimes the biggest moves in markets are not driven by company or by earnings. They are driven by geopolitics, commodities, and global policy decisions. If you want to understand how events like the Iran Israel war move the global markets, subscribe to the channel, because we break down the hidden mechanisms behind the global financial events here.